Good morning, traders. It is June 3rd, 2022, and this is my pre-market outlook and technical analysis for day trading the SPY. Today is the last day for new fund flows, and the market internals are speaking loudly to me. The broken and scattered order flow are so evident in market internals, gaps within gaps. Market internals are telling me that it has stretched to the upside as far as it could, and there has to be some pullback before anything else happens. At the same time, there's just a lot of overhead supply the market wants to get to and chew into, but we've stretched to the limit to the upside right now. This is what happens in the volatility box. We cover a large range very fast because of air pockets and order flow, and we get incredibly long 1, 2, and 5 minute bars. And we go back and forth through the same range for a while until we save up enough energy to break out on the time frame we're consolidating on. The volatility box is large because it is the daily and weekly time frame that is in consolidation. So ground that usually take 2 days to cover, we should do it in just 1 day. For right now, I'm going to say the box spans from 425 down to 380. Get ready because it will not be wise to trade in the middle third of the range. I will have a clearer picture of the volatility box on Monday. But for now, for intraday concerns, let's use 418 to 406. And what I'm going to do, let's take this 418 area or thereabout all the way down to, what did I say, 406. All right, so now that we have that intraday, this is kind of our box intraday. The next thing I'm going to do is take that 418 area minus 406, that's a 12-point range. And if we divide 12 into thirds, that's 4 points in each third. So we're going to divide the box into thirds. So that means the first third is from 418 down to 414. Just so we can see it. Then the next third will be down to 410. All right, now that we have our intraday box together, I want to point out something. It will not be wise to trade in this middle third of the box because you will get chopped up. Order flow will happen so fast back and forth. There's just no way to get any bias or get on any good side of a trade, because it's liable to come back against you at any point. So if I'm trying to short today, it has to be from the top third of the box. And then likewise, if I'm going to try to get long, it's going to be from the bottom third of the box. So it's just a simple way of kind of explaining what happens when we get this huge box. But I'm probably going to do something a little more elaborate in the weekend review or the weekend pre-market, because even though this is on an intraday time frame, we're going to be looking at a much bigger box because we're consolidating on the daily and weekly time frame. And trade is going to move so fast. It's basically the same. It's the same ideal, but it's basically going to be over a much larger range. So this is just kind of to give you an ideal of this consolidation on the daily and weekly, and how it's going to be, and how I approach a volatility box. Because in truth, the volatility box can be very lucrative if you can stay out of the middle of the box, and if you're able to get your trades on in the top parts of the box or the lower third of the box. So that's what we're looking at. So Monday, I'll have a much clearer picture of the overall volatility box that we're entering into. But the main concern is that you don't want to get chopped up in the middle third of that box, because this is usually where the air pockets are. We're going to move very fast one way or another in that box. All right, let me bring up the key levels for today. All right, here we are with the levels of the day. Starting on the resistance side, we have our jack resistance at the 415 to the 416 area. We have queen resistance from 417 to the 419 area, and then king resistance from 420 to the 425 area. On the support side, we have jack support at 413 to 412, queen support 411 to the 409 area, and then king support 408 to the 401 area. The main thesis for today is bearish, closing below 417.39 with a projected target low of between 411 and 405. The alternate thesis is bullish, closing above 417.39 with a projected target of around 418 to 425. Order flow is messed up, so there is not going to be a great feel for directional bias, meaning we could be down by 3 points 1 minute and then up 4 points the next. The current channel we are in is 397 to 416, major channel. And the next major channel is 416 up to 425. The next minor channel up is 414 to 425. And the minor channel below is 414 to 404, which we're in now. Let me bring up the scenarios of the day. All right, our first scenario is our trend day down structure. We open gap down from the previous close, highlighted by this blue line, or the previous close being represented by this blue line here. We open gap down, rally back towards that previous close, and then we find resistance on or before that previous close. And then from that point, the downtrend of the morning begins, the golden window. And this is where we look to short once we see this holds as resistance. We reach our midday chop either around a possible queen or king support area. And what I want to make you aware of is that now things kind of begin to be unfair again, and it's possible to see that the greatest portion of the move has happened overnight. So we could kind of get a trend down day that kind of looks like this, where we get the rally back up, but we don't go much further than the overnight lows, and we spend the rest of the day fighting, trying to get back up. And that's still kind of a trend day structure where we could see a decent rally into the close, because this is an expiration day, and weird things along with air pockets and chopped out order flow, we could see a huge range or huge rally going into the close. So that's our first scenario, our trend day down structure. Alright, our next scenario is our rounded reversal day type structure. We could get a continued push lower toward the jack or queen support area and find midday chop around either that queen or king support area before spending the same energy we use going down to go back up the second half of the day. Again, this has strong vice versa implications where we could actually see a move like this to the upside first, continued up, and then reach our midday chop around either the queen or king resistance area, and then use the same energy we used the first half of the day. We come down with that same force the second half of the day. So that's our rounded reversal day type structure. Please be aware of the vice versa scenario that could take place. And here we go with the last scenario, which is our expanded range day structure. We could look to set a decision area low boundary around the jack or queen support area before starting to rally for a portion of the day. And it is quite possible that getting through that rally is possible to roll over or fade into the close. I didn't put that portion on, but that it's possible that we get this type of fade into the close. But the key part about the expanded range day, at some point we're going to cross over the previous close and close above it. So even if it happens way at the end, it still turns into an expanded range day structure in my eyes. There's also I'm sorry, I was just disturbed. I had a sorry, I'm trying to respond to someone via message here. But again, the last scenario is expanded range day structure, and the key part about it is that we'll usually cross over that previous close at some point in time. Today could be very, very explosive, one way or another. So one of the things I want to point out before I let you go, and let me clear the drawing so that I can bring this up. All right, just wanted to remind you of where we are in the trend channel. We came very close. Well, we're getting close to the top of the trend channel, which just happens to be that 425 area. I was thinking that we would go try to tag it before rolling over, but nothing says that it has to happen that way. And we're going to go revisit the middle portion of the trend channel. So it could start today and happen, and we can roll over and try to go revisit this and then pop back up. But you just want to be aware of the channels that you're in, because as we get into these air pockets in this chopped and scattered order flow, it gets really hard to pick out intraday levels. And so you want to be aware of where you are overall. And you don't want to get so focused myopically that you chop yourself up in this area here where we just keep going back and forth, and you basically just keep getting chopped up and losing money in the same place. And that's why it's so important to go out to a larger picture, divide the range in thirds, and try to make it a point to only enter at the top third or the bottom third for your entries. If you're shorting, enter into the top third. If you're looking to buy, you want to wait until it's in that bottom third. So it's just very important to do that from a risk standpoint, so that you don't continue to just chop yourself up and add risk into the same place and just keep getting rolled over and chopped up in the same place. So that's it for today. I hope this helps. Please know and understand your risk, and wishing you a positive trading day. Have a great one.